The housing market is F. And if you can't see that that's true, well, then I feel sorry for you because you're F too. And if I didn't see it coming, I would be F'd also. But I'm not going to let anybody operate from a place of being F'd. I'm going to tell you the truth so that you can make the best decisions for yourself, for your family, and for your financial bottom line. And I'm going to share what's happening right now in my market, right now, today. So we don't have to worry about April numbers because April numbers are completely meaningless. They are irrelevant. They might be instructive to give us some lagging information, but that's not helpful if you're thinking about buying or selling right now. And it's certainly not helpful if you're trying to read the tea leaves that you can read to know what's going to happen in the future. And I fully intend to share what experts are sharing with real estate professionals right now, which when I share it with you, you are going to fall out your chair if you're not sitting down. So please sit down so you don't get hurt. And I'm telling you, the information that they're sharing is going to hurt people because the information they're sharing is dead wrong. But April numbers were just reported, and the National Association of Realtors, or NAR for short, reported that home sales fell by 3.4% in April due to high prices and mortgage volatility. And while mortgage application demand skyrocketed last week, it fell off a cliff this week. And I wonder why that is. Maybe it's got something to do with the fact that mortgage interest rates are damn near 7%. Again, and I'm on the record as stating that I suspect that mortgage interest rates are going to go down towards the end of the year. I suspect that they're going to be trading closer to the fives than the sevens. And if you don't believe that that's an inside job to juice the economy, well, I do. But right now, today's news, the global debt level is at record highs. Damn near 305 trillion with a T, not a B, trillion dollars in debt, $45 trillion more than pre-pandemic levels. And it's skyrocketing fast. And to be abundantly clear, this is not an isolated incident. This is not just the United States. This is a global debt crisis. Everybody is out of control with debt. Russia, China, Mexico, Brazil, India, Turkey, you name it, they got a debt problem. And here in the United States, consumer savings is at an all-time low, and credit card debt is at an all-time high, and inflation is out of control. People are maxing out their credit cards in order to buy groceries, and banks are failing. Commercial real estate is tanking, and banks are failing left and right, and banks will continue to fail left and right. And I talked about what would happen during a liquidity crisis damn near a year ago because I've lived through one. The liquidity crisis that we're going to see, God forbid there is a run on banks. And I suspect that at some point there will be a run on banks, just like Silicon Valley Bank. When depositors demand their money back and there is no more money to give back because the money is not in the bank, it's been invested wherever they invested it, but it's not immediately available, the consumer will lose their effing mind. And the housing market is effed, right along with every other market too. And yet they continue to tell us that the employment rates are wonderful and non-farm payrolls are doing stupendous. And yet, with a little bit of research on my end, I was able to go out and determine that the hours worked reported was down by a tenth of an hour. And that certainly was not headline news. But if you extrapolate a tenth of an hour across the data set, what you find is 500,000 job losses, 500,000 additional job losses, which aren't being talked about. And to be clear, every single one of these blowout numbers that they've reported, and I think they're up to 19 consecutive blowout numbers in terms of the employment statistics, almost every single one of them has been revised to the downside the following month. Just wait a month and you can find it buried somewhere. But it surely will not be the headline news because they want you to think that employment is strong. And it's obvious with all the layoffs that are happening. And don't trust me, just Google it. Google for yourself and just see what layoffs just happened. So please don't trust anything that I say. Don't take my word for it. Verify it for yourself. And if you've gone that far and you're using the Google machine, go ahead and just type in zombie firms because zombie firms exist. And zombie firms are companies with earnings that are not sufficient to continue operating and pay the interest on their debt. And to be clear, not to pay off the debt. Any cash generated is immediately spent on servicing that debt. The estimate for zombie companies that exist right now is somewhere around 14%. And I'm here to tell you that number is light. That number is underreported. That number is something closer to 30%. And if you thought that a tenth of an hour translating into 500,000 job losses was bad, if 30% of the companies that exist right now are zombie firms, which they are, unemployment in Q1 of next year or Q2 of next year is going to be closer to 15%, double digits. And to be clear, I'm not trying to scare anybody here, and I am going to share exactly what's happening right now in Boca Raton, Delray Beach, and Boynton Beach as of today. So you know what the market really is. You know what home prices really are. You can make an educated decision based on real information right now, and you can govern yourself accordingly. You can do what's right for you because you're empowered with the right information, the information that is accurate, that is timely, that is actionable. But I just got an email today from a leading source of information for real estate professionals. We're talking about people who pay money to get the best information in order to empower themselves and help serve and support their clients. And I'm going to read it to you verbatim because I don't want to mess it up, but I need you to understand this is the nonsense that people are being told and people believe. I don't want you to be one of them. But the title of the article is Powerful Job Market Fuels Home Buyer Demand. Are you effing kidding me? Is this what people really think? But it goes on to say the spring housing market has been surprisingly active this year. Well, I wonder where they're talking about because in my markets and the 22 metros that I've covered in Florida, it hasn't been particularly active. In fact, sales are down somewhere between 20 and 30% in every single market that I've covered, period. All of them. Which, to be clear, does not mean that people are not buying homes, but there are significantly less of them and far less people that are selling their homes because they don't want to trade out of their 3% mortgage rate into a 7, 8, 9, 10, 20, 50% mortgage. They don't want to do that because that is not right for them. And I don't blame them. But it goes on to say in this article that the job market is growing at a stronger than expected pace. If anyone you're working with tells you that the job market is growing at a stronger than expected pace, please run away. Please call me because I will connect you with a real estate professional that understands the hyperlocal market, that understands the leading indicators, that can go out there and advocate and negotiate for you the right way. Because anybody who believes this nonsense is an incompetent moron. But it goes on to say, with inflation still high, the Federal Reserve, the Fed, repeatedly hiking the federal funds rate, and a lot of chatter in the media about a recession, it might surprise you just how strong today's job market is. Yeah, it would really surprise me because I know it's not true. But what might surprise you even more is the fact that it appears to be getting stronger. Now, for anybody not paying attention, I hope you remember that I just told you that every one of those blowout numbers that they reported has been revised downward every single time. So the blowout numbers, which are not accurate, as evidenced by the 10th of an hour being worked on the downtick, which translates into 500,000 job losses, they're pointing out that unemployment is at a 50-year low or damn near it. And because the economy and job market is so strong, you can't possibly lose buying right now. If you're looking to buy right now and it's right for you right now, and you can endure volatility over the course of the next 5, 10 years without losing sleep at night, or if you've got the money and want what you want, then by all means do so. It's right for you. But if you're buying a home because you think the economy is strong and the labor market is strong and that real estate only trades higher, for the love of God, please don't, because we are entering into a season of volatility, the likes of which I have never seen. And I was a stockbroker for damn near 20 years. I've seen it all. I lived through the great financial crisis. I know how markets trade and I know how to capitalize on volatility. But a house is not a stock. A house is where you live and max out your life and enjoy it with your family. But if you run the numbers and can't afford to do so, or you're trying to time the market in order to get the best deal, please stop. You'll never be able to time the market. And if it's not right for you now, don't do it. Now, although the National Association of Realtors numbers came out today, we don't have the most recent data for April in my markets or really anywhere in Florida. But I do, and here's what they are. April numbers in Boca Raton, the average sold price upticked 2.2%. But that's April and we're in May. Don't you really want to know what's happening right now? I suspect you do. Well, I'm glad you asked. May numbers in Boca Raton, the average sold price right now, as of today in May, is down 6.6%. You heard it here first. Average sales price down 6.6%. Boca Raton, which takes us to Delray Beach. Delray Beach, April numbers, which aren't reported yet, but I got them. The average sold price for a single family home in Delray Beach was up 22.7%, damn near 23%. Massive, whopping appreciation. And I've been predicting single digit growth in most markets. I was dead wrong. We got double digit growth in April, but we're not in April. So what does May look like? Well, I'm glad you asked. And Delray Beach single family home sales in May, the average sold price so far, and to be clear, May's not over yet, but up till today, the average sold price is up 20%. Double digit appreciation in Delray Beach, which takes us to the city in which I live, which takes us to the Boynton Beach housing market. Single family homes in Boynton Beach for April, which is old. Average sold price was down damn near 7%, 6.7% to be exact. But given that it's May, nobody cares. What's happening in May? We want to know. Well, I'm going to tell you. May numbers so far are up 5%. Average sold price for a single family home as of today in May 2023 is up 5%, which is a long way of getting to there's volatility that's happening right now in our market. And you can bet your sweet bippy that volatility is back on the table and will intensify when the next bank fails, when the net debt crisis happens, or when any other leading market or leading indicator gets smacked right in the mouth. But when those markets crash, and they will, expect to wait 5 years for home prices to catch up with whatever that crash looks like. Now, I hope you found this content valuable. And if you did, please subscribe to the channel, follow me on Twitter, and I'll be up and running on Rumble soon in the event this channel ever were to go away, which I pray it never does, because I'm committed to telling you the truth. If you're thinking about buying or selling anywhere, please reach out because we would love to help. And check out my next video because I suspect you will love it a lot. And until next time,